Hello and welcome, everyone. I'm Marsha, Head of Partnerships at Kilimanjaro Consulting, and we are thrilled to have you join us today. As someone who closely follows innovation in fintech space, I've always admired Australian-founded companies who continue to punch above the weight on a global stage. Founded in 2014 and headquartered in Sydney, Australia, EasyCollect was born out of the need to solve cash flow problems for the family wholesale distribution business. What started as a local solution for a common problem has grown into a globally trusted platform, helping over 1,000 businesses across 24 countries streamline collections and improve cash flow. The platform manages over $1.7 billion in accounts, assisting businesses in sectors like wholesale distribution, manufacturing, and construction to improve their cash flow through automated receivables management. EasyCollect has been a long-standing partner of Kilimanjaro, and given we're living in a time of rapid change, market volatility, and growing economic uncertainty, if there's one thing that remains absolutely clear in this environment, it is that cash is king. And I'm super excited to have EasyCollect with us today to provide their insights on how smart technology can help Australian and New Zealand businesses with this. A few things to mention before we dive in. Today's session is being recorded and will be sent to the attendees and people who have registered. You will all see a Q&A button within your Zoom interface. Please feel free to ask us anything relevant to this topic throughout the session so that others can also see the questions and add to the conversation. We will reserve time at the end of the session to answer these. Also, you'll see a few polls pop up on your screen. Would love to hear your thoughts and experiences, so please take a moment to share your input when they appear. So without wasting any more time, please join me in welcoming GB from EasyCollect. Over to you, GB.
Thanks, Marsha. Thank you all for putting aside some time for this. I think it's very important, as we all know. At the moment, we live in very uncertain times, and cash flow, getting cash in the bank, and cash in the bank tends to be somewhat king. So Marsha's introduced herself. This is a quick background of me. I started life as an accountant, so I didn't stay in that particularly long, but I've done it all my life in and out of some of the roles that I've had. I'm very, very aware of what it's like to work in accounts receivable and how hard it is to prize money out of people the old-fashioned way by just calling and sending dunning letters and hoping. I've done a lot of work with ERP systems over the years. I've worked in Acumatica, I've sold Acumatica, and I work with Marsha and her team to try to bring this solution to her Clartner basis. So my mantra is, and you should all take this one and write it down, a sale is not a sale until the money's in the bank. And so when your salespeople come in and go, hey, I really cracked my sales target this month, and you go, yes, but no one paid, then it really doesn't count, because unless the money's in the bank, it doesn't really have any relevance. So I'm not going to drill down into long, boring demos of products so you all fall asleep today. We're focusing on today on how we get money in the bank in these times, and we're going to be talking about automated collections, and we're going to talk about risk management, because you don't want to onboard bad debts. So bad debts start when you onboard bad people. So we want to cover that as well. So getting paid's never been easier. By automating the process, we can take a lot of the back end laborious tasks out of it, and no one ever gets overlooked. So quickly today, we're going to talk about how we can accelerate cash in your bank by using automation, how a self-service payment portal really helps that process, because 25% of people transact out of 9 to 5. So if they want to pay you and there's no one there to take a credit card payment, or they've got they want to download an invoice and they can't get to you until 8:30 or 9 o'clock the following morning, then that payment is delayed again. We'll look at how risk analysis, how using metrics and how using market data plus your own book can give you really good analysis of what it is that your debtors look like and are trading like, so you can take action prior to them going bad. And how I'm pushing people into doing more direct debit work, especially with new customers, using the automation of direct debits to make sure that once the invoice is due, we go and get the money and it goes into your account. You don't have to chase, you don't have to worry about anything. So we're going to look at that as well. So Easy Collect makes life easy for you and for your customers. There's nothing worse than spending valuable time on repetitive manual tasks. And if you ask accounts receivable people, you know, they love the customer interaction. Doing invoicing runs is great, even following up queries. But one of the things that people in AR often dislike most is chasing money and asking for money. And never forget this, you've provided a service, you've provided some goods, you're entitled to be paid. And people using you as a bank should not be part of the equation. So inconvenient payment processes get in the way. You don't have to stress about following up small invoices. If you've got a lot of low value small invoices and you're spending a lot of time chasing $50, $100, $200, $300 amounts that often get ignored, then you're wasting time doing that, and automation solves that problem. So the statistics don't lie. We have a macro calculation, and it shows a 67% improvement in average days overdue within a 30 to 60 day, 90-day period, and 11 weeks a year given back to your staff. So we track 100 businesses metadata, and we can show that that's the case. Now, we're just going to pop up a little poll now because it's relevant to where we're going. If you could just quickly fill that in and show that whether you're very confident, somewhat confident, not confident, or not sure, which is a worry, how your business has the right controls in. So these are the metrics that we get from Easy Collect. So we know that the solution works. So if you said, for example, well, I've got an average overdue of maybe $400,000, and I was to say to you, well, within 90 days, $280,000 of that normally would sit in the over 30, over 60, over 90 will be in your bank, I'm sure you'd agree that that makes a big difference to anybody's business. So what is the connection between Acumatica and Easy Collect? Well, Easy Collect is a cloud-based software system that hooks onto the side of Acumatica using the Acumatica API. So it's a no fuss, no think about, no uploads, no spreadsheets, nothing that you have to do. So we sync to Acumatica and we pull the data out of Acumatica into Easy Collect. So in Acumatica itself, we'll embed a payment link on invoices and sales orders and statements and emails. It allows you to take payments over the phone, and you can get the activity notes that we create in Easy Collect pushed through into Acumatica as well. In Easy Collect, we take the information, the invoice, the debtors information out of Acumatica, and we apply collection rules, payment management, task management. We use credit scores and credit applications to give risk, and we create dashboards for you. So that's the link. But it's all done through the API in Acumatica and Easy Collect. So we usually sync at 2 in the morning where the server load's low. You can sync anytime you like, but debtors tend to be reactive, not proactive. So as long as we're capturing all the information that's happened the previous day, then we can start working on that basis. So it's not server heavy. So the main key, I think, behind Easy Collect is what we call workflows, which is the automated follow-ups. So when I first joined Easy Collect, I coined the phrase, and it's an old phrase, the squeaky wheel gets the oil, but the squeaky wheel when it comes to collections is very, very important, because for those of you that have worked in AP and for those of you who've worked in SMEs all your life, you know that the people who are going to call you, the people that won't let you go past 30 days. And then there's a whole group of people that often don't chase you till 45 or even 60 days because, they're a good customer, they'll pay, and they just let it slide. So what Easy Collect does is automate that whole process. So a few days prior, we will remind people that invoice 4182 for $1,352 is due. Now, when I was in AR doing collections, it's one of the things that I did manually, because we all know that if Bob in accounts doesn't have your invoice 4182, even if it's due, it's never going to be paid. And if Jill's got it sitting in her inbox waiting for approval, but she's got a query with the invoice and hasn't passed it on. So by creating pre-reminders, what we do is we remind Bill in accounts that it's due, so he takes notice of the fact it's not going to be forgotten. But it also stimulates someone for Bill to say, I don't have this. Then you can chase the person who's the approver prior to it being due. So we get the invoice in the system ready to be paid. The communications that we send out go from the don't forget your invoice is due to, oh, you've obviously overlooked this, and up to, look, you're going to get a letter of demand if you don't do this. But the workflows also flow through a process of a first follow-up, which is prior, a second follow-up, which is 10 days later, a third follow-up, which quite often is a text message, because text messages find this. And my little tip to you today is, if you're just using the old paper-based credit applications, one of the things that should be a mandatory is the mobile phone number of who the purchasing officer or the procurement officer, and the mobile phone number of the accounts person. And if they won't give you that, then I wouldn't be giving them credit, because what they're doing is putting a block there, so it's not easy to call them. You've always got to go through the switchboard and they can decline your call, but you can't text them. So that's just a little bit of advice from me today. The fourth follow-up escalates and the messaging gets harder. And usually by the third follow-up, we're scheduling a call from you, because at the end of the day, this is still humanized collection. And if they haven't responded to a pre-email, a post-email, and a text, then unfortunately, it looks like they're going to be reluctant payers. Now, usually by the time we get to the third follow-up, 70% of people have paid. So then we're into the rump, which require a call. As I said to you earlier, the key to all of this is letting them know that they will not be forgotten, and that it happens regularly. And so there's no way out of not paying you. And so you're ahead of the game. So this will even escalate up to going to a debt collector who will issue a letter of demand, who will issue and then create follow-ups as well. And so we go all the way through the process. But the ideal is to get everybody paying on time. And once people know you're chasing, that happens. But to make sure that they know that they're not going to be overlooked. So the messaging is all customized. It's branded with your logos, your colors, your format. It's sent from staff emails, so it could be Jill at or accounts at, so it doesn't get buried in server spam filters. It's all personalized with the data that comes out of Acumatica. And every email that we send also gives a summary of not only what is due now, but is what's coming due. So we're not spamming people invoice by invoice. Every time we send something out, we send them a summary of what it is that they owe. And also, if we send them a text message, there is also a payment link that they can access from the text message. So we don't have to have them come out and go in somewhere else. They just click on the link in the text and they get straight into the payment portal. Now, the payment portal looks like this. It's very simple. And again, it summarizes everything that's due. Now, again, remember what I said, 25% of people transact outside of 9 to 5, so we want to catch those. I'll just hold briefly. Look, I see another poll's popped up. On average, how long does it take your business to collect payment after issuing an invoice? And so less than 15 to 30, 30 to 60. Now, keep in mind, if you're on 7-day terms and people are paying you at 30 days, they're still, they're still delinquent 4 times past your terms. So, but we'll just go with this poll and then we'll have a look at the results a little bit later on. So back to the payment portal. So the beauty of the payment portal is people can pay by credit card, they can pay by bank transfer, they can pay, there's a B2B, so if they've got an ABN number. So flipping back to this poll, 36% of you have debts way outside of terms. And so, you know, that's concerning. So we'll look at that a little bit later on. So the beauty of the payment portal is it gives, again, everything. People can pay an amount that's not the invoice amount. So it's, again, if someone says, how many of you, I don't know, you can't answer me, but if you're an AR, someone owes you 8,420 and the answer is, oh, we're not paying that because you send us, there's 27 line items on an invoice and one line item is the wrong price. So I'm not paying any of the invoice. Classic AP ploy, really great. But it just, again, oh, well, somebody's got to give me a credit note and I've got to discuss this. And you just basically buy another 3 weeks worth of credit. Within this payment portal, we can say, well, that's great. Those 5 chairs that you're querying were $1,000. So would you mind paying the other 7,800? So they can go into the portal and they can pay 7,800 on this invoice. So at least you're getting some money in. But the other thing is people might have called you and said, look, I'm sorry, there's no way I can pay this 13,000. Can I give you 5,000 on account? So they go, okay, well, I'll pay this dollar and I'll pay 4,999 off this. Because again, for those of you in AR, there's nothing worse, is there, than someone sends you, they go, oh, I said I'd pay them $5,000 and they just send $5,000. And they owe you 12 different invoices and you have no idea which one they want it applied to. Part payments don't end up with remittance advices because they go, oh, I just said I'd pay you 5K and here it is. Whereas with this system, if they're processing it through the portal, we know what they've applied to. So it saves all that hassle with reconciliation. The other beautiful part of this portal is that they can download invoices and they can download statements. So again, and I just keep going back to this, another thankless job in AR when someone calls and goes, oh, Jane, I don't have invoice 4182. Could you please send me a copy of that? So you have to go in, find the invoice, create a PDF, email it out of Acumatica or email it out of Outlook. And whereas with this, you go, well, hang on a minute, Dave, you've got just, here's your link, or you know your link, just log into your portal and you can download the invoice. They can also view invoices. This is another barrier to payment. People might look at this and go, what's that invoice for 13,000 for? And they hit view and it shows all the line items and they go, ah, yes, I remember that. That's fine. And I'll pay it. So all these things that are barriers to payment, we remove. Rule number 2, never put barriers in the way of someone paying you. So that's the payment portal, download invoice portal, download statement portal, view invoice portal, allocate. Now, if people pay through this portal, those invoice payments then automatically get written back to the invoice in Acumatica. So you don't have to wait, get the remittance advice, see the thing coming into your bank account, then manually key it in against the invoice in Acumatica. That's all done automatically for you. So there's the time saving. So that's where we're up to. We've got automated workflows that work out a way of immediately getting cash in. We've got a payment portal that provides no barrier to payment. Now, there's one proviso to that. A lot of larger enterprises will, and I've got to be honest with you because you'll find out sooner or later, they don't transact through this portal. What they'll do is they'll go through their system, their Acumatica system, the payables person, and they'll click all the invoices they want to pay over multiple suppliers. They'll run payment run. It'll create an ABA file. They'll upload to their bank, and they'll send you a remittance. If it's transacted outside of this portal, we don't see it. But what we do pick up is a lot of the small invoice people, your smaller customers that want to pay by credit card. They just want to give you some money. So they're the itsy bitsy ones. The beauty with this payment portal too is you obviously probably all take credit cards as well. So people phone in and there's a credit card and then you get that horrible little strip off your terminal machine every day that never ever agrees to what goes in the bank. And then you've got to work out what the difference is. With Easy Collect, Whatever's paid through the portal on that day that we know has settled that day, we will give you a remittance advice for. And it says, yesterday we got 36,420 in. That was for these 37 debtors. And that matches exactly with the debtors payment and the amount in the bank. So on your bank rec, you've got $37,000 settled and a $37,000 amount in your bank account. Tick the reconciliation button and it's done. So a lot of time saving there as well. I'll skip over this because I've talked about allocating payments, but this shows how it works in Acumatica. But we basically just allocate back to the payment made. A lot of time saved. The other thing too with Easy Collect workflows is we make it simpler to chase because we've got inbuilt things like payment plans, promise to pays. So there's nothing more infuriating than when a customer calls you and says, hi, I'm really stuck for cash. Can I give you this invoice 4182 for 5,800? I can pay it on the 5th of June. And you go, not a problem. You put a note in the system that it's being promised paid by the 5th of June. And what you also do is hit promise to pay, and the system then stops any chasing. Again, we've looked at the human side of this. There's nothing more infuriating than when you call someone and say, look, I can pay this by next Friday, and then on Monday you get a reminder. And you go, but I've told them I'm paying on Friday. And so all that is automatically built into the back of Easy Collect. So we just, you know, we take the ease out. Now, the good news is, and this is what happens with a lot of promise to pays in non-automated systems. Bill says, I'll pay you 5,800 on the 3rd of June. 3rd of June comes and goes, and it might be another few days before it's realized that, oh, hang on, Bill was supposed to pay us on the 3rd of June. It's now the 6th of June. He hasn't paid us yet. We better call him. Easy Collect goes, it's the 3rd of June. This invoice is outstanding, and it starts to chase again. So again, all that intelligence and automation built into the back of it just makes life so much easier in terms of getting cash in the bank. A question I often get asked is, oh, but we've got older customers and I really don't want to be staying, hey, and they've been with us for 30 years and they'll send us a check and I really don't want to say, come on, you need to pay this or else. And so all the emails that you send out are all tailored, and they can be tailored for different groups of customers and different classes of customers as well. So your email to a 30-year-old person who's been with you for 30 years might be, hi, Jim, I know you always pay on time. You obviously overlooked this. Would you mind having a check of the invoice and see me getting a check over to us? As opposed to, you're now 30 days, we're going to cut your credit off. All right. So all these little things are already built into it to give you the flexibility of different circumstances for different customers. For example, those of you who deal with Coles, Woolworths, Bunnings, we could send them 5,000 emails. If their terms are with you are 60 days from date of invoice, that's when you'll get paid and you can take that to the bank. No point chasing them. So we exclude those, all right? And so if a dispute's lodged in the system, we'll stop chasing. We can temporarily pause at a customer level if that's what you want to do, or at an invoice level if that's what you want to do. So a customer might say, you sent me 5 invoices and they're all wrong. We can pause the customer. You sent me this invoice and it's wrong. We can pause chasing that invoice. A lot of flexibility to make sure that your customer relations are always maintained as well. There's nothing worse than chasing money where the customer thinks they've paid or they've got a dispute with it and you're still chasing them. So that's all overcome as well. Very, very flexible in that sense. Now, the next big part that a lot of people underestimate is that you don't want to onboard bad risk. And you want to make sure that your current customers are still a good risk. And if you look at the number of failures and bankruptcies that have happened before, during, after, and since COVID, and even more over the last 3 years, people think that a customer, because they've been with them for 10 years, is a good customer. And in many respects, that's true. They are a good customer, correct? They buy from you regularly, they pay their bills. But that doesn't mean that they're 5 minutes away from bankruptcy, because they could be having circumstances in their business that we're not aware of. So what we do in Easy Collect is we start with the credit application, which is digital, which matches the directors' names from ASIC. And so we know who the directors are. We then get a credit score applied to the credit application, which tells us if what their credit score is, if they're going to pay on time or if they're not. Now, we do this we work with Ilion, which used to be Dun & Bradstreet. It was Dun & Bradstreet 5 years ago. It's been Ilion for a long time now, and still the I don't know why, don't ask me why they changed a brand that was well known to something that's not. But we pick up 1 million metadata points a month from them, and then we apply that information to what they're doing with you. And so from that point of view, we can give you a risk analysis of each of your customers. And so that risk analysis is very, very clever, because it rates your customers with a red, which is they're not paying you and they're not paying anybody. Now, if you've got the insights part of Easy Collect, you can then start to monitor those people and get real-time monitoring. Have the directors changed? Have they changed their address? Have they made an application, or have they changed their ABN? Has a director resigned? Which all give you, if they're not paying you and they're not paying anybody else, and 2 of their directors have resigned, I suggest that you don't give them any more credit. You try to get stock back, and you insist that they pay immediately and really start pushing. Because once people go into liquidation, it's too late, and you're getting 5-10 cents in the dollar if you're lucky. If you can get ahead of that, then you've got some chance of getting a better return, even if you're getting your stock back. Then you get a green, which is they're paying you and they're paying everybody else. Well, if they're doing that, they're a good, solid customer, and you don't have any worries about them. And if they're 10 days late, it's not the end of the world. You don't have to worry. Then you get another warning flag, which is they're paying you, but they're not paying anybody else. So this again is how you use metrics to go, well, we must be, what are we, the supplier of last resort? We're the only person that they can get this product from. But how long, if they're not paying everybody else, how long before they stop paying us? So that's a red flag. And then the most interesting one, which doesn't go to debt collection, but goes to customer relationships, and this is really interesting, is they're not paying you, but they're paying everyone else. Why? Your invoices are wrong, you're sending them the wrong goods, someone's upset someone, and the relationship has gone sour. And so they're not paying you for a number of reasons, but they're good customers for everyone else. Now, that's a good time for account management or the salespeople to give them a call and say, hey, we'd like to come out and see you. What's going on? Oh, look, we're actually looking at other suppliers because you always send us the wrong goods. Well, can I have an opportunity to fix that, please? Because again, we all know once you lose a customer, it's almost impossible to get them back. But if you save a customer because they think you're interested in them, they stay as a customer. So these are the sorts of things that these sorts of metrics can help you with. And this shows you the customer risk that I was just talking about. You know, you can and you can look up credit scores of customers when you're thinking of onboarding them. You've got real-time monitoring. You get a dashboard of risk, so you can see who are green, who are orange, who are red, who are yellow. All this is at a glance. Okay. I'll gloss over that. That's just the sort of businesses that we deal with. We deal in companies like 5 to 100 million revenue, sales on credit through multiple channels, high volume invoices or low margin invoices. And I alluded to this before. I put a system in 2 or 3 years ago for a person, and they were in the NDIS space, and they were paying, you know, they were invoicing people for $50s and $60s and $70, and it was thousands of these invoices every month. And it was too much for them to manually chase. But if they did manually chase, the cost of chasing them outweighed the margin they made. So they might as well have not done the job to start with. So we put in a whole system for them, including direct debits, which solved the problem. Now, let me just, before I wrap up a little bit, let me talk to you about direct debits, because this is another big takeaway from today, which really helps get your book into shape. And it should be a proviso, I think, and I recommend this to everybody, for all new customers. Now, direct debits, as we know them, used to be painful. They used to be something you had to, I'll use the word fax. You're probably all too young to remember what a fax was. You'd have to fax the bank, or you'd have to email the bank, and the bank would control the direct debits. Not so anymore. All the direct debits are now controlled from within EasyCollect. It's a little digital form that we send out. People complete it. They say whether they want to pay by credit card, whether they want to pay by bank details. And basically, when the invoice falls due, we go and collect the money. Now, behind this is a whole bunch of smarts as well, because 7 days before the direct debit's due to be, we'll go, hey, Jane, just letting you know, invoice 4182 for $3,275 is due on the 6th of June. We'll be taking that. Please make sure you have funds in your credit card and or bank account to cover that. So you do nothing. Once the invoice falls due, EasyCollect direct debits kick in. We go and collect the money. We write the payment back to the Acumatica debtors record, and that's an end of it. So my recommendation is that you should, any new customer that you are onboarding, mobile phone number for the accounts people to start with, but secondly, use direct debit. Now, that flushes out a couple of things. If the accounts person won't give you their mobile number and the company says, no, we don't do direct debits, that's a little bit of a sign that, are they going to pay on time? Am I going to have to chase them? Why won't they fill out a direct debit? So maybe you shouldn't give them credit. And I know the salespeople are saying, hey, these guys are going to spend $50,000 a month, and they're going to be 20 invoices a day. They're going to be the best customer ever. Well, great, sign a direct debit. And so now the beauty about the direct debits with an EasyCollect is if you send the letter out and you say, Jane, this invoice for $3,800 is due on the 6th of June, and Jane calls you back and says, hey, GB, sorry, I've got payroll that day and I'm expecting a big payment the next month. You go, not a problem. And you can change the direct debit due date, or you change the invoice due date, and it won't auto collect. So again, flexibility in to help with customer relationships. Jane goes, oh, I really appreciate your help. 5 days later, we go and collect the money. It's in the bank account, and it posts to the invoice. So lots of flexibility. So basically what I've sort of covered today, and to show you the system in detail, obviously it's better that we do a one-on-one session with you, because then we can tailor it to your needs and your business. But what I've hoped that you'll perhaps take out of today is that automation of your accounts receivable. Everybody talks about AI, but essentially we've been doing that for years with just algorithms and automations. It's a similar process. But those automation AR receivable tactics that we have built over the last 10, 11 years are proven, they work, and they do collect outstanding invoices faster, and you end up with a lot of time saved, and you end up with money in the bank. And if anybody can look me in the eye and say, well, in 2025, with companies going broke left, right, and center, with the recessionary mindset that we've got, we don't really care about cash in the bank, we're good. If our debtors ledger is $1 million overdue, we can cope with that. Well, you think how much more money you could make with that in the bank. So automation tactics give you far more invoices paid faster. Customer portals, allowing people to download an invoice when they need it easily without having to send you an email. Tools that allow them to easily pay, easily click links on emails. Even today, a lot of smaller businesses pay after they put the kids to bed, sitting at the kitchen table, working out what's to pay. And if your one says, here, push this button and pay me now, they go, oh, that's easy. So it helps that relationship. They can quickly and easily say, hey, I've got an issue with this invoice, you've overcharged me, and and it feeds straight into the debtors system. Okay. And understanding risk. It's so important to know where customers are and not just assume that because they've been with you for a long time, they're a good customer. You should always be able to use the data available in the marketplace to understand that. And I guess the big one is, and I read this just recently, often people think, oh, we need more money in the bank, we need to sell more. It isn't about selling more. It's about collecting faster. And that's a genuine, heartfelt belief of mine. Remember, a sale's not a sale till the money's in the bank. So if you sell more and that's sold on credit, all you end up is more overdues. So those are the things to take out from today. Automation works, it cuts down on time, and it gives you money in the bank. Risk is something that you should do from day one with your credit applications. Do not onboard bad debts. So be very, very vigilant at the front end and make sure that you get the relevant information and push for a direct debit system when they sign up. Use the payment portal, saves time, better customer relationships. So thank you, everybody. I was trying to be as concise as I can just to give you an overview of how this can genuinely help your business. So over to you, Marsha.
Thanks, Jamie, for the run through of the platform. That was quite a nice way of going through it. And what stood out for me were two things. First was the initial slide you had on what it actually means for a business in terms of time savings. 11 weeks of a staff's time, that's huge. And with all of the capabilities available within the product in terms of automating routine tasks, those 11 weeks that a business saves, that can be used to focus elsewhere. And focus on things like high value collections, like personal follow-ups on critical accounts, or you analyze your data for strategic insights. And that I thought was quite massive in terms of time saving. And the second thing, automation. You've talked about this as well, the automation, AI, all these buzzwords nowadays, and which is great. But rather than a cookie cutter solution, Easy Collect has got automation plus the flexibility in setting it up to cater for the way a specific business runs and how they would want to maintain relationships with the customers. And that to me talks to the maturity of the platform, and it being suited perfectly to the mid-market. So thanks for that, for taking us through all of that. Moving on to questions. Let's see what we have. The first question is around the common risks businesses face when they don't implement automation. How does automation help mitigate these risks?
Okay, so we all know, if you ask any employee, they're always time poor, and a lot of things fall through the cracks. So the risks that businesses face when they don't implement automation are, they really don't know what the state of their customers are. So they continue trading with a customer, the customer goes slightly delinquent, they let them go out for 60 days, and then suddenly they go broke. And so they lose that. You run the risk of having too many people doing repetitive tasks that can be done much more efficiently by automation. Okay, so what you risk again is cash flow, and the risk of not doing automation is cash flow. When something is automated, nothing gets overlooked, nothing gets not done. There is no customer that isn't analysed and you are reminded of. So by using automation in the accounts receivable space, There is no stone unturned, nothing gets overlooked, and that's how those risks are mitigated, because you're always ahead of them.
Yeah, rightly said. Um, it is kind of looking at what benefits it could bring to the business, right, and weighing it against um, the opposite. Um, we have a question from William. I have a zero account. Is it possible to implement all of them, whatever you presented in this presentation, to my zero?
Yes, is a very short answer. If you'd like a longer answer, William, I'll give you a longer answer. But zero account, right? We do integrate to, well, everything these days. The way that integrations allowed us to do it, we can do it. But zero, absolutely. And we have a lot of zero customers. So yes.
Perfect. Is the portal set up for e-invoicing?
Not at this stage. It's on the roadmap. I know e-invoicing is a very important thing. What we do in terms of invoicing is we take the invoicing out of Acumatica and we use that, or we replicate that, and so that's what's available for downloading. But when you talk about e-invoicing, you're talking about that specific thing which you just sit there and close your eyes and it all happens automatically, and that is on our roadmap because it's becoming more and more requested.
Perfect. What are some of the key challenges businesses face when implementing automation, and how can they overcome them?
Um, Look, Easy Collect is a very painless integration, but I think the challenges, it's like eating a meal, and quite often people say to me, oh, well, I'm putting in Acumatica, now I'd also like to put in NetStock to do my stock, and I want to put in Valexio to do my reporting, and I want to put in Easy Collect for my AR, and I go, how about we take a little bit of a breath and we put Acumatica in first, and then when that's at the sandbox stage and you're ready to go live in a few weeks, then you can start easing in some of the others. The challenges that's the first one with automation, is trying to do too much, too soon, all at once. That's always a challenge because wheels fall off, and it's always better to do it in a calm, linear fashion. Now, from a sales point of view, that's terrible for me because Marsha's team is putting in Acumatica, and that's not going to be due in until the end of August. So I have to wait till July before you'll sign up. But that's life. So that's one of the challenges. The other thing that a lot of people let's not talk about, it is a challenge, is there are a lot of automations that people think will run their business for them, and so they just assume I've automated that, therefore everything will be taken care of. Now, I was looking on the future of AI, and in 5 to 6 years, computers will be cleverer than the sum total of all the humans on the planet. So maybe in 5 years, you'll just be able to push a button and say, hey, automate my business. But for the moment, big challenges come with not understanding the limits of the automation or not using it properly. And so, or it not being the right fit for your business. So always look at, what are your benefits you're going to get out of this? What are the costs versus the benefit, which I know is an old way of doing things. But, Easy Collect, the sweet spot with Easy Collect is 500 debtors. It usually costs about $800 a month plus some implementation, which isn't a great amount. It can be cheaper for zero. It can be more expensive if you've got 3,000 debtors. So if you get based on, well, that I had a customer the other day that I've been talking to for 12 months, and his big challenge was he needed 3 accounts receivables people to do the job, and he couldn't find a third. He had 2 really great people, and he couldn't find a third great person. And that cost him $3,000 a month for Easy Collect plus Credit Insights. And he said, oh, that's a no-brainer. I have to pay an accounts person $70,000 plus. This is going to be a fixed cost for me of $3,000 a month. And even if it goes up by 5% a year, it's still never going to be what an employee costs. So that's a challenge, but you have to understand the benefit to yourself and make sure that you get benefit and use the automation correctly. Does that answer the question?
Yeah, it does. Thanks for that. And we've got the last question along the same lines. How does automation contribute to the long-term success and sustainability of a business, especially in terms of scaling operations?
Well, let's talk just about Easy Collect, because then I don't have to generalize. If you look at your balance sheet, current assets, say inventory and debtors, that's it. That's cash. And without cash, you can't pay anything in your business. So if you do automation correctly, you use that in the terms of Easy Collect, of getting cash in your bank, of saving time. And of course, scaling is easy, because if you double the size of your business, previously you'd go, oh, well, I need an extra 2 accounts people, and 1 to process the documentation and 1 to chase the money. Well, if you don't need the 1 to chase the money, it's not as though you're not laying people off, you're using automation to scale. And that's what Easy Collect does. It scales up your receivable. If you've got 500 debtors or 50,000 debtors, Easy Collect doesn't care. It will email them, it will chase them, it will schedule a call list for you for the ones that need calling, it will send test messages out, it will process the payments. It doesn't care. It'll work night and day to do this. And all automations are the same. But with Easy Collect, it genuinely is automated, apart from a call list where at some point you have to call people. Most of it does it by itself.
Yeah, and
I like William's question. It was much easier. More William questions, please. Yes, more William questions.
Just to kind of add to that, I guess along with automation, what it also does is the analytics part of Easy Collect. That also gives you a very good snapshot of the health of the business, which I think is quite valuable if you're thinking of scaling operations and growing your business. Just having a finger on the pulse just brings so much value.
Agreed. Thank you.
So that's for that. That's for the questions. Should we cover off the last few slides?
The last slide is just where you reach out to. My details are on that QR code. So if you would like to just scan that now, that'll give you all my contact details, or you can go back to your consultant at Kilimanjaro using the samacs email, or the phone numbers listed on the page, or you can just email partners@easycollect.com.au. There's multiple touch points. So
yeah, absolutely. Look, any questions you have, if you've got a good relationship with your account managers from Kilimanjaro, feel free to reach out to us or Kilimanjaro, and we can help arrange the demos or whatever else is required as next steps. Sorry, GB, were you saying something?
Look, I think in summary, I think in 2025, you have to seriously be looking at how to automate parts of your business to make it more efficient and to give you the scalability that Marsha talked about. But I also think in 2025, if you have anything outside of terms, you really should be looking at automating your receivables process. I won't even say Easy Collect there. We're the only people that I believe do this as well as we do. But I think you should be looking at automating processes and looking at the best fit for each of those processes to gain scalability. Look, I'll just give you a little anecdote. When I way back in the day, when I was selling systems, I was selling EXO, believe it or not, and I'd say to people, what was your turnover in the first year that you started? And they said, oh, the first year was brilliant. We started, it was just the 3 of us, and we turned over $1 million. I said, oh, that's great for a first year. And what profit did you make? They went 250,000. I said, oh, well, what did you how long have you been in business? 10 years. Or what did you turn over last year? Oh, 50 million. And what was your profit? Oh, 1.2 million. And you go, hang on a minute. So you've gone from 40% net to like 10% net. And what happens is that sales go up and cost goes up, and the margin reduces because the costs to service that extra debt. So automation takes costs out of scalability. And, you grow $1 million a year, but you add $900,000 in cost to service that $1 million in sales. Whereas when you automate, that's a fixed price, and you know you can scale another 5,000 customers without any additional receivables cost or any extra inventory cost.
Well said. That makes sense. So thank you, GB, for your time today. And thank you, everyone, for coming on to the session. We look forward to continuing these conversations with you, and have a good rest of your day, everyone.
Thank you, everybody. Appreciate your time. It's always glad to see people turning up, so thank you.